So housing's going to get a little more expensive. And why? Well, rates are skyrocketing. I'm going to show you that all next. So the first information we have out today is the inflation numbers, the CPI. How much inflation is at the consumer level? Why should you be concerned with this? Well, it's because what the Federal Reserve is doing. As long as the inflation is running out of control, the Federal Reserve is going to step in every meeting and start driving up interest rates higher and higher and higher, thus making everything that you're going to buy more expensive. Housing, that's the long end of the curve of this thing. But even credit card rates, personal loans, student loan debt, if it hasn't been forgiven, and a whole bunch of other things are going to get more and more expensive. The one piece of the puzzle that the Federal Reserve is really trying to drive down is housing. Okay, housing is a part of the CPI number. Most people don't know that, but there is a housing or a shelter factor in there, and I'm going to go over that in a minute with you. But the headline news that we see so far is inflation rose 0.1% in August. It doesn't seem like much, but I'm going to dig into the details. But I said yesterday, if you go back to my video from yesterday, I said if the number comes in at 8.1, the CPI number comes in at 8.1 or higher, you're going to see the stock market plummet and interest rates spike. What are we seeing right now? We're seeing the Dow Jones basically down 800 points. I wouldn't be surprised if we get to 1,000 points drop in that by the end of the day. And I wouldn't, it wouldn't behoove me to see mortgage rates go up at least 0.25% just today alone. So let's dig into these details. The first piece of this puzzle as we're seeing right here is the stock market is just plummeting. It's fallen off a cliff here, guys, because what the expectations of the market is now the Federal Reserve is going to be even more aggressive. Thus, it's going to bring evaluations of stocks down, bringing the price of everything down on the stock market. On the flip side of this, credit is getting more expensive, especially mortgages and credit card rates. But let's go over to how this is all affecting the mortgage-backed securities market. So this is the chart that we see every day. And I usually bring this up at the end of the video because I want to give you guys a gauge on what's happening in the markets right now. This is what's happening to the MBS market. Let's refresh this because it doesn't refresh by itself. It's only down 47. I thought we'd be down at least 60, 70, and possibly hit the 90 mark by the end of the day. We're starting to stabilize. So what is this on your screen? Well, if you're a newbie to the channel, we monitor the mortgage-backed security, the bond on Wall Street that is the biggest component of your mortgage rate. So when we watch this number right here, this is the bond, mortgage-backed security bond that trades on Wall Street. What you're seeing on your screen right now is the price of the bond. So here's how rates work, is the price of this bond goes down, as you're seeing right now, and you just saw it click to down 48. As mortgage bond prices drop, that causes its yields to go up. So here's how it works in a nutshell. The quick little demonstration. I'm going to show you how, if prices drop, how the rate goes up. Okay, so here's how bonds work basically. If you buy a bond, let's say I got a mortgage-backed security bond in my hand right now, and next year when I turn it in, I'm going to get $100 back. Okay, so if I pay you a high price today, so let's say I pay you a high price, I'll pay you $100 today, and then next year when I hand in my bond, you're going to give me $100 back. So we paid a high price, all right, for that. What is my yield on that return? So I gave you $100 and you gave me $100 back. Well, it's zero. Okay, so let me explain to you how as the price drops, the yields go up. So let's say in this equivalent equation that I did, I give you $50 today, a lower price, and then next year you give me $100 back. Okay, that's what the coupon price of that bond was, remember? What is my yield at that point at the lower price? 100%. I doubled my money. So you can see how if prices drop, it drives up the yields. So we're going to see today probably at least an eighth, maybe by the end of the day, a quarter increase in rates. So if you're out there and you haven't locked in, you better lock in soon. And at the end of the video, I'm going to show you how you guys can reach out to us to get a mortgage quote. But the next piece of this puzzle, what I really want to look at is where is the numbers broken down in the CPI? So this is the CPI numbers broken down by the government, all right, U.S. Department of Labor. And we see here the numbers. It was up 0.1 month over month and up 8.3 year over year. But where's really the data coming in regards to this? Well, we see some encouraging signs right here in the part of the energy. You can start seeing energy prices really dropping or taking a toll. Remember just maybe 60 days ago, you were paying $5, $6 a gallon. Now it's maybe $3. Okay, so here's where that's coming into play. You can see right here, the energy sector. Look at the numbers. Since May, here I'll scroll up. Since May, where we peaked, the energy started coming down. I'm sorry, June. We peaked in June, and every month since that, we've been coming down. Look, in June alone, we had energy commodities up 10%. In July, it was -7. In August, it was -10. So the energy sector is starting to kind of calm down, and everybody says it's shelter. Well, that number is up there, but not as much as these numbers here. So you can see that shelter is a part of this function. The next piece of this puzzle, I bet you guys didn't know, the government is going forward on October 1st. If they don't come up with some kind of resolution, the government's going to shut down, and we hear this every year. So what they're working on right now is pandemic aid. Why we need more pandemic aid, I don't know, because that's the problem of all this. And then energy permitting, basically making more permits or granting more permits in the U.S. Well, we know that we're in a resource dilemma right now, so we could use more energy. I'm not saying go back to fossil fuels 100%, but we can't just click on a dime and turn everything to fossil or green energy. Next piece of this puzzle is pandemic aid. We don't need any more pandemic aid. Please, please don't. More government spending is right here. Since in the last 2 months, what have the government done? Well, they're spending still like drunken sailors. Look at the CHIPS Act that they just proposed. It's tax incentives and all kind of other things for the chip industry, which has robust profits, and these executives are making billions of dollars. So why they need more incentives, I don't know. But we just granted, well, just think of it. You and I are paying these chip manufacturers $52 billion so they can maybe manufacture and do more things in the United States. Next piece of this puzzle is the Biden's administration forgiving student loan debt. So I don't know about you guys, but I paid for my college and I paid for my children's college because I worked my ass off. So why I'm having to pay now for other people's colleges, I don't know. But the tune of that, you were looking at about $519 billion in student loan forgiveness. So now let's get on to where mortgage rates are. So we're going to see right here, these are lagging. So what these mortgage rates represent is where rates ended yesterday. So we're probably going to see these rates as they refresh throughout the day, going up at least 1/8%, maybe 1/4% by the end of the day. What you're seeing on your screen right now is and I have the link down below, are mortgage rates issued by Mortgage News Daily, and they do this on a daily basis. Why do I use theirs? Well, I'm a broker. I really don't have a rate sheet because I use over 100 different lenders. So what I wanted to do is try to make it easier for you guys to figure out, where are the averages out there? I know rates range from like 6 to 7%. It depends on your credit scores. It depends on what kind of property you have. It depends on a whole bunch of other things. But these are where these are the 6 most commonly used mortgage programs. And the equation here is basically this. Mortgage News Daily sent a survey out to mortgage lenders all over the country, and they said this: if you had a client that was buying a $500,000 house, putting 20% down, what would their mortgage rates be? Well, the more caveat to that is they would need a 740 credit score. It was going to be a single family home, and it was going to be their primary residency. Have to say that for legal reasons. So here's where the mortgage rates are. You can see basically there's been no events yesterday. I kind of predicted that because everybody was on the sidelines waiting for the CPI number that came out, and we got it. So what we're going to see today, like I said, is based on all this information, we're going to see rates go up at least 1/8 to maybe 1/4 by the end of the day. Maybe I'll do a midday update to inform you guys on what's going on with that. But that's it for right now. So guys, I have one other thing to tell you guys, and then people always comment on this and saying, Dan, I don't watch your videos for a commercial. Well, most people don't even know what I do. I'm actually a federally chartered mortgage broker. Okay, so if you're out there in need of a mortgage, if you're looking to build a house, buy a house, refinance, debt consolidation, reverse mortgages, anything, we would love to help you. One piece of this puzzle that we do, we offer a free service. If you've gotten a loan estimate, so if you went out there and you got a lender and you started working with that lender and they came back, how do you actually know that they're giving you the best rate? Well, what they do is within 3 business days of pulling your credit, they have to send you what's called a loan estimate. So all I'm asking you to do is, if you got that loan estimate, if your rate's locked or not, please email it to me. My email is down below. What I'm going to do is I'm going to scan that throughout the whole system. We deal with mortgage lenders all over the country, and they're the largest mortgage lenders in the country. And we scan your loan to over 100 different lenders in the whole country to make sure that the quote that you're getting from your lender is the best out there for you. If not, we would love to help you. So how do you find out more about me and my team? All you have to do is go to therateupdate.com, and you're going to find everything you need there. It's our phone number, how to schedule a meeting with us, and you can even apply online. So God bless, guys. Thanks so much for watching. I'll see you tomorrow. Bye-bye.